Hi, welcome to the TradingRooms Podcast. I'm your host, Raghu Kumar from Rain Platforms. For our regular listeners out there, you may be wondering two things right now. Why haven't we launched an episode in almost 2 months? And why do we change the name of the podcast? Let me address both these questions right now. The past 2 months have been very busy for the team at Rain Platforms. As many of you know, we recently launched a product called TradingRooms. TradingRooms is India's first automated social investing product. The elevator pitch goes something like this. DIY trading is a very difficult task for most of us. Most of us have jobs and other commitments, which really prevent us from actively being engaged with the stock markets. TradingRooms solves this pain point. With TradingRooms, you can discover and subscribe to expert traders and investors by subscribing to their rooms. Some rooms are free and many are not. Some are trading only equities and others are trading derivatives. Some are doing discretionary trading and others are doing algorithmic trading like Aashutosh. We're also launching cryptocurrencies very soon. So we're basically introducing automated trading to the masses because when you subscribe to a room on TradingRooms, the trades are automatically taken on your brokerage account. And we're integrated with more than a dozen brokers in India. You also have the option of taking the trades in a one-click execution manner. To learn more about TradingRooms, check out our website at www.tradingrooms.in. The product is just 3 months old and the traction is picking up very quickly. And so, since we don't have any sponsors on this podcast, we decided to rename the podcast from the Investment Blueprint to the TradingRooms Podcast. So there's that. Now, let me introduce you to our guest for today. It's my pleasure to welcome Aashutosh Chandra from Xumit Capital. Xumit Capital is a discretionary portfolio management firm which strives to achieve alpha by using strategies such as tactical asset allocation, momentum play in equities, and derivatives for hedging. I've gotten to know Aashutosh a little bit over the past 2 months, not 2 years, since Xumit Capital has set up a few rooms on TradingRooms. Prior to joining Xumit Capital, Aashutosh, who is an MBA graduate, previously worked at ICICI Bank at their corporate banking division. At ICICI Bank, he learned about different working capital products and served it to their customers. Aashutosh has a knack for the equity markets. He likes to talk about the latest developments and products in this domain. Currently, he's working at Xumit Capital as a full-time financial analyst with a focus on systems trading and investing. Today, we will cover different areas of trading. We'll try to compare discretionary trading and algorithmic trading, how they differ and which is better. We'll also go into the nuances of creating a dynamic trading system since this is the forte of Xumit Capital. Aashutosh, welcome to the podcast.
Thank you, Raghu, for having me in this podcast. And I hope all our listeners will, get a few key takeaways of, the fundamentals of system trading. And talking about the 2 years of knowing me, maybe 2 years down the line, we would get to know each other, and maybe in some other podcast, we'll be sharing this.
Definitely. I mean, that'd be, obviously a testament to, how well TradingRooms did over that time. So, exactly. Right. So what I thought we could do was just kind of start with your general background, Aashutosh, in terms of how you got into trading, and then maybe more specifically, systematic trading. How did that evolution happen for you?
So, Raghu, right before I got into my first job, I was attracted towards the markets. Like any other retail investor trader, I stuck to the news, and I used to, trade based on the news. But somewhere down the line, I thought that this isn't that going to work in the long run. So at that time, I didn't give much focus on concepts such as risk management and trading psychology, right? So when I got hold of these two concepts, so, I mean, even after grasping these two concepts, I was, I thought that things aren't still working for me. So that's where the term system trading got known to me. Like I used to read about system trading, like how do you design a system? And being a computer science graduate, I was, I easily used to create and code the systems and used to backtest it on the backtesting engine. And, based on this journey of mine, I I thought that why not stick to the system trading rather than getting into the discretionary and getting that trading psychology which the veteran traders have. So I guess system trading works for me.
Got it.
Yeah.
No, so I definitely want to know more about how you started building your systems, and you mentioned back testing. But before we get to all of that, let's talk about Xumit Capital, right? I believe you're at their office right now. So,
Exactly.
tell me about what you guys do, and how the company has evolved.
So like I told you earlier, today I've been overtime working. Yeah.
Right.
So yeah, yeah. So basically, Xumit Capital has two lines of businesses. The first one is the investment, wherein we create tailor-made portfolios for our client based on technical and fundamental analysis. Then we are also into derivatives trading advisory, and most recently we have started in crypto as well. And crypto is something wherein platforms such as TradingRooms would be of greater help to us and our clients as well. And our second line of business is the investor immigration program. For, let's say, if ultra high net worth individual wishes to get a citizenship or a residency of some well assorted country such as the US or the UK, so we consult them on private placement basis. So these are the two lines of service which we are into.
Got it. And how do you spend like a typical day, at Xumit?
So basically, my role over here is to create trading systems. Like, firstly, you need to create an idea around how do you create a trading system. We have got tons of historical data on which we create and backtest our system, and we validate all the results. And firstly, we create all the trading profiles. I mean, let's say I create a trading system. Some days I create a trading system on trend following one. Some days I create a trading system on mean reverting ones. So that's how I get into the system trading. And next up is the automation part. Like currently, all our strategies are in semi-automation mode. That is, I would say, the rule-based mode. And in future, we would like to be, like to automate, fully automate all our strategies. So that's how the semi-automation work I do on daily basis. Yeah.
Got it. I definitely want to talk about that, automation versus semi-automation. Before that, though, let's first talk about discretionary trading and system trading, right? So I know you mentioned that you have basically mostly only been involved with systems trading, right? For those listeners out there who are not very familiar with the differences between discretionary and systems trading, can you first define the two, right? And then what are some basic kind of advantages and disadvantages to both discretionary and systems trading?
So when I talk about the term discretionary trading, it is like something to have a complete hold of your trading style, like based on the analysis of the chart, based on the technical indicators that you use on your charts, you are entering and exiting a trade. Wherein when I talk about the system trading part, even before entering the trade, when to enter, when to exit a trade, and you have some predefined targets and the stop losses. So that's the two major difference between the trading styles. And also, when I talk about the discretionary part, you have to have a great hold on. One is the greed and the other one is the fear, right? And and when we talk about the system trading, you have lesser human intervention when it comes to system trading. So that's these are the key differences between the two trading styles.
Sure. And in terms in terms of advantages and disadvantages, right? I know you're going to be obviously biased towards systematic trading, but
of course.
so am I, right? But at the same time, if you have to think about maybe a couple of biases or advantages, advantages and disadvantages, could you try your best to kind of, assign a few?
I mean, let's first talk about the discretionary, which I don't much like. So this, for someone who has a greater mentality, who can handle greater volatility in different market conditions, so he or she can easily pursue his or her career in discretionary trading. And for someone who isn't very well organized in logging their trades or entering or exiting their trades, for them system trading works really well.
Sure. Yeah, that makes a lot of sense.
Yeah.
So now let's talk about, in one of your blog posts, right? I was reading about this. You talk about how oftentimes we can actually incorporate both styles of trading, right? Which I found very interesting because usually the people that I come across, they're either in one camp or the other, so
Exactly.
So how would someone do that, and why would they do that?
Okay, so like you said, out of the two trading styles, each one of them, has their. I mean, they just stick to one part of it, right? Why not stick to both parts of it? Let's say if I have a trading capital of 10 lakh rupees, right? And if I have a good mentality, if I can handle good volatility by looking at the charts and entering the trades, then why not to allocate around 80 to 90% of your capital in discretionary and just give 10% allocation to the system trading part. So that's where you can diversify your overall trading portfolio. So that's how a combination of both. Obviously, at the end of the day, it won't harm you, because at the end of the day, we are here to make money, be it in discretionary or system basis, right? And let's say even one more combination I can give you. Okay, we have this system which we had designed. Okay, the system was created in such a way that it took the trade based on the system, and we took the exit on manual basis by looking at the chart. So that's how we can have a combination of both. So it doesn't harm a trading portfolio. That's why it is necessary to create a trading system around it. Yeah.
For some of our listeners who are probably only discretionary traders, right? Who are thinking about maybe getting into systematic trading. How would someone make that decision, right? In terms of whether systematic trading is the right type of trading for them, and how would they actually go about kind of navigating that whole decision? Yeah.
So like I told you earlier, if someone is been generating good amount of money using discretionary trading, and he or she wishes to create a trading, let's say he or she wishes to create a trading system on different market conditions, such as let's talk about he's very good in trend following. When the market is trending upwards or downwards, he or she is making tons and tons of money. But let's say in a sideways market, he or she doesn't know what to do. So he or she at that time can run a trading system by allocating us just a small amount of his overall trading capital. So that
makes a lot of sense. Yeah. And I like the fact that you're saying, right right off the bat, allocate a small percentage towards it.
Exactly.
And see how it does. That makes a lot of sense. Let's talk about what you guys are obviously very good at, which is building trading systems, and you as well directly. How would someone go about building a trading system? What would those general steps look like? And how do they know whether, what they've built is ready to go live?
So this is the fun part for me. I mean, this is the part which I'm really passionate about. So firstly, even beforehand, you need to have a trading profile of your trading system which you wish to design. So by trading profile, I mean what type of key elements do you need in your trading system, like particularly the time frame. On which time frame do you want to trade in? Do you want to create your system on a 5-minute time frame, or on an hourly basis, or on positional or swing basis? So that's the first element. Next up is the what sort of indicators do you want to use in your trading system? It could be trending indicators such as the moving averages or the MACD. It could be the volatile indicators such as the standard deviation or the ATR. It could be the oscillators such as the RSI and the ADX. So that's the second thing. And the third thing is the historical data, which I talked about earlier. Okay, historical data, I mean, you need to create a strategy in such a way that you can backtest it on the historical basis. Okay, whether in the past it has been performing on consistent basis or not. So these are the 3 key elements in creating a trading system.
Sure. I wanted to circle back to what you mentioned initially regarding news trading, right? And you mentioned how it wasn't really an activity that you could sustain over time, right? Can you elaborate on that? In terms of just generally, how did you kind of build those news trading systems? Maybe without going into specifics, right? Up to you. And then number 2, how and why exactly did you stop trading that?
So, I mean, even okay, when there's a bull market, a lot of market participants get in by thinking that he or she can earn a good amount of money by putting n number of capital on any of the stocks. So even I did the same mistake when I started my journey. So that was something typical amateur mistake which I did earlier. So I mean, it has nothing to do with the systems which we create now.
Got it.
Yeah.
Let's talk about kind of when you're building a trading system, you need to make sure that that system is pretty robust, right? In that, in the sense that it should be something which can withstand different types of market conditions and environments and things like that, right? How do you kind of go about making sure that your trading system can do well in different market environments?
Yeah. So this is a question which, a lot of people are concerned about. So let me talk about this thing. Okay, if you are going with just one system, let's say your system is a trend following system and you are going with it in a sideways market, Raghu, would that be system earning during that market condition? Would the system be profitable?
Probably not, but it could be.
Probably not. You will be butchered from the long and the short sides of the market. Right? Yeah. So for that, I always urge people to, create more than two systems. At least two systems you need to have. One could be of a trend following, the other could be of the mean reverting one. Right. So even when you get into the market with two systems, one system, would have got stopped and the other would have, earned you profits, good amount of profit. So at least two systems, is a must when talking about the trading systems.
Got it. Let's talk about probably one of my favorite topics, backtesting, right? I know backtesting techniques have changed and evolved over time a lot. Back when I used to, actively build systems, I would basically use Excel, for a lot of my backtesting. And then eventually I would have, once I had a proof of concept, then I would code it, have it coded since I don't code. And then I would then test it across historical data and things like that. Now there's a lot of tools out there, which you can use to backtest with. So a few questions here, multi-legged question. What is backtesting? How does one backtest? And then how do you guys backtest?
Well, a lot of questions you were asked on backtesting. No, I'll be happy to answer all of them. So basically backtesting is you have one thing is that you have the historical data, and the other thing is your trading strategy. The trading strategy, in simpler terms, could be EMA, moving average crossover of two fast moving and slow moving averages, right, on the long and the short side. And the historical data is the open, high, low, and close, also the volume, if you are considering the script or the index futures. So the strategy which you have in your hand, if you are testing it on your historical data, let's say if you have a historical data for the past 5 years and you are testing your strategy of a simple moving average crossover, whether a combination of 20 and 50 moving average has outperformed the indices, the benchmark or not. So that's how the backtesting goes. And secondly, we at Xumit Capital, we have a bunch of programmers which backtest all our strategies. Like personally, I prefer platforms such as TradingView. TradingView is a cloud-based platform wherein you need not worry about getting the historical data. Easily you can code your strategy on their programming language called PineScript. Right. Yeah. And also TradingView has this great community wherein you can get the ready-made scripts of all the simple strategies which are floating nowadays. Also AmiBroker, if you wish to get into a good amount of if you want to create your system on an in-depth basis, then you can use AmiBroker. So AmiBroker has its own programming language which is really similar to the trading scripts PineScript language. Right. So you can, get a good amount of data. You can feed a good amount of data, and you can code your strategy, and you can, check all the results in the past.
Yeah, no, it's amazing how many tools there are available now,
Yeah, and also
So
when I
yeah,
talk about so these tools, can be used for the scripts and for the futures. I mean, nowadays you are having the online platforms such as Stock Mock and Algo Test. These are the freemium models on, you can test your options strategies as well. So I mean, it's going
yeah,
great.
it's
Yeah,
unbelievable. You have
yeah, it
platforms
is
that are specifically very good for options, like you mentioned. Others are a little bit more for the equity markets.
exactly.
So yeah, so which brings me to the next question, right? Because obviously, when you're back testing, the reason you back test is because you're trying to develop an edge, right? A trading
Yeah.
edge. Let's first define what is a trading edge, right? And specifically as it relates to Xumit Capital, right? I want to know, when do you guys think about, the strategy kind of being ready to kind of deploy live, right? What are the kinds of general parameters and metrics you're looking for? And how does one kind of build a system which creates a trading edge?
So let me first define you what is trading edge, right? Let's assume you are using a trading system, which has the indicator RSI indicator, right? The oscillator RSI, and I'm someone who is randomly buying and selling the index futures, and you are waiting for a signal to come, and once your signal, let's say the RSI value, every time the RSI value has hit the 90 mark, and then you are shorting the index futures. And in the same way, I am just randomly buying the index futures. And you see that your system has created a win percentage of almost 80%, right? That is, out of 10 times, 8 times you have, your system has generated good amount of profits. And for me, I'm just randomly taking trades. So the RSI indicator for which you have the defined value as 90, that is, creating a good amount of return. So that is something which is consistently getting you good returns. So that is a trading edge for you, right? That is something specific to you, and you can once you share it, there would be a reduction in the trading edge. So we at Xumit Capital, we basically quantify our trading edge, which we'll be discussing later. Okay, we in the backtest report, we just look at how the numbers have performed, and we look at multiple systems and we validate all the results.
Got it.
Yeah.
So now, my next question has to basically be, it's related to that. When you're building a system and you come across a system with a trading edge, then how do you kind of take that and then kind of assign that green, that check mark, right? Saying, okay, this is ready to go. We're ready to kind of deploy this live. And how do you kind of, think about a successful trading system?
So let's assume you are, let's say Raghu and I are having two trading systems. You are having a trading system named A, and I'm using a trading system named B. So basically, we will be looking at some key metrics in the backtesting report, such as we'll be looking at the annualized returns. Firstly, in the past, how the strategy has been performing in terms of the annualized returns. Next up would be the maximum drawdown. How much, even in the future, you are willing to, lose your capital as well. And the third thing is the risk to reward ratio. And the fourth one is the, the win percentage. Out of all the trades it has taken on, what's the winning rate of all your trades. So let's assume you have this system A, which has gotten you returns of around 25% for the past 5 years, or CAGR I'm talking about. Yeah, and for me, the same amount of returns has been generated, right? 25% for me as well. But the max drawdown for you, it is around 15%, and for me, it's around 25%. But the risk to reward ratio is more favorable for me, right? Let's assume it's 1:2, and for you it's 1:1, right? And the win percentage is, of course, like my win percentage would be around 30%, and your win percentage is around 40%. So if we ask a third person, like which out of these two systems, which system would he or she choose, if I may ask you?
So the average person will probably go for number 2, right?
Yeah.
But the answer is probably number 1, right?
Exactly. That's where the retailers get trapped. That's where the retail traders get trapped. I mean, the newbies, they always look at the returns, right? Rather than looking at the max drawdown, rather than looking at the win percentage on the risk to reward ratio. So, you need to quantify your trades, you need to quantify your systems, you need to, assemble multiple permutations and combinations of all the parameters that you have used.
Exactly.
Let's say, do you know about the golden crossover? I'm sure you must be aware of it. The golden crossover of 50 and 200 EMF.
Yeah, that's right.
Yeah. So I mean, a lot of people are using it, but when there is something a lot of people are using it, so there is a loss in the trading edge, right? It won't be working in the long run.
Yeah.
And someone who is using a combination of 30 and 50 EMA crossover, for them it would be working really great. So, you need to check all the parameters.
Yeah. And maybe an extension to that is you can actually refer to some of these ratios, right? The Sortino ratio, Sharpe ratio, and things like that, which basically take into account the ROI and the max drawdown.
Exactly.
And the variability of returns.
Exactly.
So we'll try to include all that information in the show notes of the episode.
Sure.
Finally, obviously, since you've been trading systematically your whole life, I feel like you and I have to keep reminding ourselves that most traders don't trade systematically. There's a entire other world out there. But I'm sure, hopefully, there's a few listeners out there who are inspired, to maybe get into systematic trading. What's some kind of good advice you have for them in terms of getting started and kind of contemplating on whether they want to go into that direction?
So one advice which I give to a lot of people, when you're creating a trading system, just don't look at the returns. I mean, just look at the consistency. Whether the system has been generating consistent returns on month and year-on-year basis, or has it been performing just for 1 year and for the remaining years it has remained flat. There are systems where anomalies such as the March 2020 crash, at that time, at that particular year, the system has generated good amount of returns. And before that, the returns were as flat as in the past. So, you need to focus on the consistency while creating a trading system.
Sure. Yeah. And obviously, if you want to safeguard yourself against, March 2020, you can put the stop losses and all that into place, your risk management systems, and you're kind of good to go. History does repeat itself. I think we sometimes assume that when crazy things happen in the markets that, it's the first time that it's ever happened. It's almost always not the case. It's always, there have been crazier instances in the past. Like you said, I think you started off talking about market data and historical data. That's probably one of the key elements, right? As when it comes to systematic trading, ensuring you have not only enough data, but high quality data. So thank you so much, Ashutosh. That was a, very insightful, episode. I learned a lot. And it's going to be fun to kind of get get to know you and Xumit Capital, over time. So last question for the day. This is what I end every episode with. Where do you see yourself and where do you see Xumit Capital in the next 5-10 years?
So like I mentioned earlier, we have all our strategies designed and deployed in the live markets on semi-automated basis, right? So in the near future, we would like to, get all our trading systems in fully automated mode. And that's where platforms such as yours would come into handy. And also, we have just started out in crypto. So we would like to be, in the future, we would like to be called as a crypto trading advisory as well. So we want to be, a one-stop shop for all the investment products.
That sounds amazing, and hopefully we can experience your growth and you guys can do a lot of that in trading rooms. We'll see.
For sure. I mean, I'm really glad that at a very early stage, we are associated with trading rooms.
Yeah.
Xumit Capital is really glad.
Nice. Yeah. Thank you so much, Ashutosh. We'll chat soon. Cheers.
Cheers, Raghu. Thank you.